Are you happy with these numbers?
Good morning. Actually, we are, because as you know, the whole industry last year and currently also is being hit by extremely high headwinds on raw materials. So we look at more sequentially, and what we see there is frankly that our decorative business is back in the race. In fact, has 5% selling price increases and is back, actually has increased its return on sales. Performance coatings 3% prices up, so we're and therefore is narrowing the gap that was there. So we do believe that sequentially we're closing the gap and that we're actually making very good progress on our cost-saving program. So we're looking at it as after what happened in the whole industry last year, as getting back on our feet and moving to 15 by 20, 50% return on sales by 2020. And we feel we have a head start versus our competitors in that respect.
Thierry, let me ask you about, in the release you talked about continuing inflation for raw materials prices, continuing upward pressure there. And I wonder about your power to pass through those pricing pressures. Can you raise prices on your customers? Are you seeing pockets of resistance in certain pieces of the business?
Well, you see that in our releases. So if last year we had about 300 million euro inflation in raw material, this year it's probably going to be about the same amount on top of what we saw last year in 2017. So that's a significant impact in raw materials. As you will see in our release, and that's why there is a certain positive feeling in our company. In decorative paints, we were able to put our prices up 5%. Which means that is now offsetting what the raw material impact has been. So that's a clear answer on your question. Are we able to offset it? Performance coatings 3%. So there we're kind of halfway what we need to do. And the reason why that's somewhat lower is that we have a lot of 6 months contracts, 1 year contracts, etc. So that takes a couple of quarters more, as is the same for our competitors. So yes, we are. Now, are you saying that our customers are applauding that? I would say no. Who likes a price increase? But I do believe, and that's encouraging, that the bulk of our customers see indeed that they get the value and that therefore this is a justified increase of prices based on the inflation that we see.
Thierry, do you see Europe getting dragged into the trade war? Do you see it having an impact on your business? Do you see some of your products ending up on the kind of lists that we've seen floating around between the US and China?
Well, paint, even for a global player, paint is a very local product. So what we make in Europe is sold in Europe. What we make in the US is predominantly sold in the US and so on. So in that respect, I think we are not so much impacted, or we don't worry too much about the trade war. What does worry us, of course, is what this is going to do for the overall economy, because we're in so many segments. So we're more, I would say, worried to see what does it do to the overall confidence and consumer confidence. But the immediate impact for us is not there. The direct impact, we're not worried about it at all.
Well, what do you expect for overall consumer confidence? I mean, what do you expect the impacts of a trade war to be on the global economy?
Well, when we talk about consumer, not seeing that much. In fact, if we look, the biggest thermometer for us in that respect is our market in Europe for decorative paints. That actually is doing quite well. So we look at that, one of our key markets like the UK, for example, has been doing quite well, and that's a very encouraging in our business. So we don't see that necessarily as a big impact. What I was referring to is people who do capital investments. Our materials go into plants, go into planes, cars, boats, you name it. So when their people are a little bit more reluctant to do investment, that's often, or they move their production somewhere else, that can be an opportunity, but it can also be a negative depending on what our market position is in the region they were to choose. So that's why we're somewhat worried around it. What we do see is that for our large industrial customers, it is obviously a topic of conversation around what's going to happen, what if, etc. And uncertainty is never a good thing for economic growth, nor for anybody who works and operates as a company in those markets.
Thierry, was it back in March that you confirmed the deal with Carlyle to sell your specialty chemicals business? I think the net off that is 7.5 billion. Have you got a clear understanding now of how you're going to return that money to shareholders?
Well, your information is indeed correct. So we expect a closing still before year end on specialty chemicals. When then the proceeds come in, as we said, the vast majority goes to the shareholders, and that's definitely a promise we stick to, as we have been sticking to every promise we made last year. We have been going to quite some conversations with shareholders on what they would prefer, and that's very different. Some would like to have it more in cash, some would like to have it in a share buyback, etc. We haven't necessarily pinned it down yet, because that is also something we have to go back to shareholders. But I do believe it's going to be a mix of share buyback and a mix of returning the proceeds in cash, and then try to optimize it for our shareholders on what they get back. So not firm yet, but I think there's a picture emerging on what is the most efficient way of doing that.